Gang, what's going on, guys? It's the next door trader calling stick profit. Represent always stuck in profit. You know the drill. Man, it's been a very long time I took profit on this channel. Trust me, it's for a very good cause. Alright. So in this video we're gonna be looking at how to make top-down market analysis. Oops. So now this is a very important topic that I think most traders should look at. Like this is very important, especially in technical analysis. All right, so you need to know where this market is heading towards, the overall structure, the overall movement, price movement of this market, and then before you could basically arrive at buyers to take your trade. All right, so we're going to be going through the top-down market analysis. Now, one thing I want you guys to understand is that top-down market analysis isn't just about going from the highest time frame to the lower time frame. No, it goes beyond that because it actually gives you, it tells you where the market is headed. All right, it goes beyond just going from higher time frame to lower time frame. It gives you the overall picture of the market. All right, and it gives you the overall picture of the market. So don't just trade based off the knowledge of the lower time frame. Right? You don't just trade based on the knowledge of lower time frame. All right. So with that being said, let's look for currency pair to analyze. So we're going to look at XAU which is gold. I'm just going to take for gold chart I haven't worked on. Then we can do the top down market analysis and arrive at a particular bias. Trust me, guys. If you really want to take something out of this video, then you need to stay to the end of the video, right? So let's wait to see. Let's start load up then with the of the charts that I haven't actually worked on. Alright, so let's go with purpose. Let's make it a purpose chart. I am using that. Alright, guys, so this is XAUSD on the 1 hour time frame. Now, whenever you're making your top down market analysis, you want to go to the higher time frame, like the weekly or the monthly. However, I would just go to the weekly. For some reasons, the monthly would give us what we're going to be looking at in the monthly. It's still the same thing in the weekly. All right, so you see clearly you don't need a magician to tell you that okay, from the highest time frame, from higher time frame rather, we are on uptrend, right? To the trend is uptrend. Now we are the trend is bullish right now. There are some criteria you need to consider before or when making your top-down market analysis. All right, there's some criteria you need to consider when making your top-down market analysis. And one of these criteria is you need to focus on the major trend of the market. Now you have to understand that the market has their major trends and their minor trends in this market. All right, so first of all, you want to focus on so criteria when making top-down market analysis. Right, so criteria when making market analysis. All right. So now one of it is you need to focus more on the major trend. All right. So it's focus on the major trend. On the major trend. Now you need to focus more on the major trend of the market because from the major trend of the market, you know where the market is headed towards and where it's coming from, right? Then secondly, you need to know where the market is heading towards. All right, so you know where the market is heading towards. Here the markets heading towards. And then thirdly, you need to know the pace of the market, all right? The pace of the markets, and then lastly, you need to know the major, the deep, you need to know the minor trend of the market. That's the current trend of the market, right? So current trend, that's minor trend of the market. Now, this isn't in an orderly manner, but I'm going to explain how you could basically make a top-down analysis with just these four criteria. All right. So now, the focus on the major trend of the market. Now, that's what we're going to be getting from our higher time frame. Now, from the higher time frame, let me make this so now you have to understand that from the higher time frame, market is what moving bearish, all right? So the market has created an all-time high at 3,400, right? So now let's come down to the daily. This is one of the reasons I didn't go to the monthly time frame, because everything you're going to be looking at from the weekly time frame is almost the same thing in the monthly time frame. That's why I didn't go to the monthly time frame, all right? So let's do that this. I need to bring it down to let me let me work on the visibility. So, all right, so here we have. So like you see, basically, the price is coming from the market is currently bullish. So we don't need magician to tell you the market is bullish. So what we need to do is now we need to look at internal structures. Now the major trend of the market is bullish. So now the next thing we're gonna look at is okay on the daily time frame. It's also bullish. However, you won't mark out some external structural points, right? So at this point of interest. Now I said where the market is coming from and where the market is heading towards. All right. So now the market is bullish, yes. But if you come down to the daily time frame, you can see we started having some consolidations and internal structural break. So let's come down to the lower time frame again. Let's come down to more lower time frame. For our right here to basically see the market is giving us some consolidations, some internal structural break, right? So now, where is the market heading towards? We've seen the market created an all-time high at 3,400, 3,000, yeah, 3,400. Now, where is the market heading towards? Internal structures, right? So we're looking internal structure, out that structure, structure, and now where is the market heading towards? Market structure, okay, where's the market going to head towards? Now we have this whole imbalance right here. Of this whole imbalance, you go to the daily time frame to see very clearly. to this whole imbalance now. Price don't leave imbalances in the market, right? Price always try to Price always try to balance out, fill up these gaps. Price only leaves gaps in the market. So now it uses that as liquidity. So there will be a lot of liquidity lying around this area because we have a lot of people saying still that went bullish on gold from this point, from this little demand zone around this Twitter block that went bullish on gold around this point. So you could see they might still be holding their position, waiting for price to create a new all-time high. And then some people went bullish on internal structures, so price might come down to sweep out those liquidity, fill up these imbalances, and before we look to have a bullish continuation. All right. So now, so where's the market heading towards? The market is heading towards this direction, right? So let's come down to the 4 hour time frame. The market is heading towards this direction. Now we've had a break of structure on the upside, creating a new supply zone, right? Price created a supply zone, and price is reacting based off the supply, all right? Price reacting based off the supply. So like you see, you have this whole new supply zone right here. Price to come back, fill up this. Right, so you see price created a new supply zone. I'm going to mark this as our 4 hour supply. Mark this as our 4 hour supply zone. Alright, so let's do some settings. So now we have this our 4 hour supply zone. So let's see if the price will pull back to liquidity above this high. Above this high. Above that high and react from this whole supply zone right here. So now where is the market heading towards? It's not enough for you to identify the structure and where is the market going to retrace from. You have to know where the market is heading towards, all right? So now if you see the market is we're expecting price to pull down to where this demand zone right here to pull up those imbalances to liquidity will pull down into this demand zone right here, following this other block. And you have the structure of it. This other block. So we're going to mark out our 4 hour demand, right? So now we know the overall the major trend of the markets. Now we know where the market is heading towards. Now the face of the market, all right? So that's what we're going to be looking at next. So the face of the market. Now it's not enough for you to know the where the trend of the markets, identify the structure, mark out your point of interest. Now you need to know the face of the market, so you'll be guided as to when to exit your trade to follow the major trend and the face of the market. So for you to know the face of the market, you need to know the overall trend of which you know the overall trend which is bullish, and then the face of the market, you have the market doing a retracement, right? So the face of the market is the market is doing a retracement to this point, all right? So what we should be doing is what shorten the market. Now there was one thing with retracement, you want to know when it will be fast, and that is why you need to know where the market is heading towards. So you see all these points and giving you guys aligned with each other. So you need to know where the market is heading towards. After you know the overall trend, you know where the market is heading towards. It helps you know when you should be looking to get out of the bearish trend. Right, so because right now the market is doing a retracement, so all we want to be doing is shorting the market. So we'll be looking for shorts if the market pull back upwards and give us some confirmation, bearish confirmation. We will look to go bearish, all right, till price gets to this point. All right, so now if you're a swing trader or a day trader, this is going to help you know how to strategize your trade if you're going in from a particular point to exit at this demand zone. A swing trader or a day trader, you're going to be taking trades at daily intervals. So you look to short the market if the short opportunity appears within the day. So let's take for instance, we have price pull back upward, but we've seen internal structural break. Now, if we come down to the 1 hour time frame, Now, staying in the 4 hour time frame is for the swing traders. Right now, that's one thing you guys should understand. That staying in the 4 hour time frame is for the swing traders. However, for the day traders, now you want to look for the slightest opportunity to short and make your 50 pips, 100 pips, and 30 pips in you out of the market. All right. So for the day traders, here is our time frame. All right. So now we come to the 1 hour and look for the 1 hour supply zone. Now we mark out, we've seen an internal structural break at this point. So we've seen internal structural break. Mark out our infrastructure and pay our point of interest, right? So now, the internal structural break and then demand supply zone has been created, right? Supply zone has been created. So mark out that supply zone and then, of course, an area of liquidity has also been created to mark out that area of liquidity and expect price to fill up that area before reacting from mark out your demand zone, your supply zone rather, as our supply zone. All right, so now let's see if price pull back to liquidity above this high, above this high. Price pull back to liquidity above that high and sell, all right, to now that is for that zone, all right, to have another supply zone that was created right now. This area had this whole area acting as a demand zone. The price went bullish and book structure low. Internal structures, right? So now if you come down to the 30 minutes, so let me make this appear on the 30 minutes. So now let's 30 minutes. So now if you pull price down to the 30 minutes, you would see that all right, we still have this whole the expected price to be around here. However, people trade demand and supply flip. We want to start shorting the market from this point because we've already had this demand to invalidated and price created a new supply zone. Now you have to understand that for price to create a new supply zone, for price to create invalidate a demand zone, it must first of all create a supply zone, right? So now price invalidated this demand zone right here. You see price acted as a demand around this point, around this point. To push this price, when price got a push price upward, and then when price came here, push price upward before this price created a new supply zone right here and then validated this demand zone. So now people trade on demand and supply field to look at the price to validate this area for them before they look to short the gold as the gold, right? So a lot of people will be looking at this area as well. Now, this also can be a valid area based on confirmations. Now, you have to understand you need to have your own personal confirmation, your own personal trade confirmation before you execute a trade, all right? So, you need to have a personal trade confirmation before you execute a trade. Now, you have to understand there is nothing as there is no such thing as guarantee 100%. There's no such thing as a certain direction. You can't tell for sure that the market must get to this point before it continue the retracement. Remember, the face of the market is retracement, so it's temporal. It's not a reversal. So the market is doing a retracement. It can basically react from any internal structural points and continue each retracement. That's one thing with when price is doing a retracement, it can basically react from any internal structural points and continue its retracement. So you want to take advantage of it as a day trader. You want to be able to take advantage of it when price is doing a retracement to internal structural points. You want to be there waiting for price to do that retracement to that point before you execute. So now let's see if price is going to do retracement, take out liquidity above this high, have a liquidity sweep above this high, because a lot of people might be shorting from the Asian session, and this will have a lot of stop losses let's not put this high. So now the thing is, Once you're able to identify these areas of liquidity, based on your trade based on your trade setup criteria, then when price hits your point of interest, you look for a confirmation and then you execute, right? So now the main thing is you understanding this four criteria I gave you guys. Now I told you guys the overall trend of the market, the major trend of the market, which is the bullish trend, and then the minor trend of the market. All right, the minor trend of the market, which is this whole bearish retracement, which is price coming down bearish from this point. So now we've seen price coming down bearish from this point. If which is the face of the market, which is the market is in the retracement phase or a pullback phase rather. So now where are we expecting the pullback to get to this forward demand zone right here. However, we're expecting the retracement down to our 4-hour demand. Right, so expecting retracement down to our 4-hour demand. So we are expecting our retracement down to our 4-hour demand zone before we expect what a reversal. So now, a price can choose to reverse or can choose to continue into retracements from any point of interest, right? Be it internal, be it external. So your job is to, as a day trader, is to stay at the lower time frame, look at those internal structures and also external structures. If price does not give you confirmation from internal structures, then you basically sit and and the price to put into external structures before you execute, all right? And wait for confirmation. If it gives confirmation on external structures, then you execute, all right? So now that is how you basically trade your top down market analysis. So now we come to the lower time frame, like the 15 minutes as a day trader. I wait for my confirmations from 15 minutes and the 5 minutes to the price to be above this high, gives me my confirmation around this. So now if price gives me my confirmation around 15 minutes, and shoot my trade on 15 minutes or on the 5 minutes rather. If I get confirmation on 15 minutes or the 5 minutes, I'm executing my trade as per the trader. Alright, thank you guys for staying till the end of this video. I know for sure that you gain value from it. You can implement this on day trading activities. And it's sure that you get good results. You get good results because it's something that I've seen and proven that works. All right, so guys, if you gain value, which I know you would gain value, if you gain value from this, please drop a like and also subscribe to the channel. Thanks for staying till the end. It's your next door trader. See you guys on my next video.